Hello and welcome to Currency Call with me, Manisha Gupta. Well, let's start with the Indian rupee, which is marking losses today after touching a 7-week high in the previous session. Weak local shares and a broadly strong dollar overseas is playing on the sentiment, with the rupee trading at around 45.29 at this point in time, more than 0.5% of a loss coming in for that one. The South Korean won is leading declines in emerging Asian currencies on fears of growing political unrest in the Middle East, triggering a spike in oil prices and causing short-term investors to shun riskier assets. The New Zealand dollar has tumbled to a 2-week low after an earthquake in the region killed over 65 people. Tensions in the Middle East also putting pressure on the euro. The 17th single nation currency has declined nearly a percentage point versus the dollar. The decline in the euro comes despite the fact that a new survey showed business confidence in Germany, Europe's biggest economy, has hit a 2-decade high. The euro at this point in time holding above 1.36 on your screens. The dollar index against major 6 currencies is trading firm at around 77.9, just shy of that 78 mark. Chatting currencies with us today is Abhishek Goenka. He is CEO of India Forex Advisors in Mumbai, and Adam Cole, who is Head of Forex Research, RBC Capital in London. Thank you, gentlemen, for joining us. Let's start with you, Abhishek, and we have seen the international worries continue to put in a lot of pressure on the international markets there. Swiss franc, Japanese yen and US dollar have been the gainers in the markets. How do you see all of this panning out?
See, US dollar, as in-house view of India Forex, we have been a little bullish on 2011. We feel that these kind of geopolitical tensions and overall crisis is likely to be staying, and on and off this will happen. So I guess US dollar and the index should head towards 79 or 80 maybe in a couple of quarters time. In a short term, it is possible that euro could gain a little bit strength because of interest rates hikes getting priced in the market, and also various other currencies like UK also pricing in 3-4 interest rate hikes this year. So because of this, it's possible that short term it could be a little weak, the US dollar, but on a medium to longer term we feel that the US dollar should be a little bit stronger. As for the yen is concerned, I guess yen is quite in the range of 80 to 85 now. It's anybody's guess where it's going now. But recently what we have seen in the yen, which is you have seen a very interesting development happening, is that whenever there was a huge risk aversion in the market, that is the time when yen actually plunged drastically down. We saw huge risk aversion in the market today in the morning when all the major indices were down by around 400 points, Hang Seng and all. But despite that, you see the yen has not gone drastically down, and on the charts it's also getting a little visible that the dollar yen pair is getting bought not only because of risk aversion but because of genuine growth in US happening. So I think I would be a buyer of the pair in yen, and heading towards 85-86 would be my bet on the yen.
Sure. Adam, let me get you into the conversation as well. And as the Middle East tensions escalate, what trade do you see building up in the international forex markets?
It's quite a difficult theme to trade in international markets. The winners from higher oil prices, which would obviously be one consequence in terms of currency markets, tend to also be the currencies that lose when market risk appetite is diminishing. So I think trading a supply-induced shock in oil prices is very difficult. We like pairs like, for instance, playing Norway as a positive oil story against Sweden as a currency with a similar risk profile. Similarly, being long the Australian or Canadian dollars against the euro would be another play on that, trying to take out some of the risk appetite move and focus on commodity prices.
Sure. Abhishek, on one side we have seen the Egyptian or the Middle East problems really. On the other side, the commodity prices really have run up. Look at crude prices holding above $90. Gold and silver really gained up. Are you looking at commodity currencies also with some interest now?
See, in commodity currencies definitely likely to benefit from the huge escalation in prices that we have seen in the commodities per se. I think till the time we are going to see such low level interest rates across the US or the other countries, I think, and when the currencies or the economies are still in a big problem, there is sovereign debt problems everywhere, I think, and equity markets in US is definitely going to do good, but emerging markets as of now, somehow it's getting kind of overbought. So I guess commodities is the best bet as of now. So I think the commodities and the precious metals would be the best bet, and I think these currencies are going to be relatively stronger. But at the same time, we are seeing that little bit growth concerns are coming in countries like Australian dollar and all, because of China. You know, because they can't export a lot in China now, because China is getting very, very strong, because they have to fight their own inflation. So there I think it would be strong, but at the same time it will not be like a great rally we are going to see in these commodity currencies.
Sure. Adam, let's talk about the Indian rupee now, and today of course has been a weaker day, but yesterday we did see rupee go up to nearly 44.98 as well. What's your view going forward onto that one?
Somewhat nervous still until markets have a real sense that the stance of policy is credible again, which will require not just one but I think several interest rate hikes from here, coupled with a tighter budget. Then I think we are still nervous that India underperforms the other emerging markets that we're more optimistic on. So short term we are still nervous, longer term we'd be more positive.
All right, similar question to you as Abhishek. How do you see the rupee faring now for the rest of this week?
That's anybody's guess nowadays. Anyways, personally I feel that 3 or 4 major factors are actually driving the rupee as of now. One is definitely the flows. Now flows, we all know that 2011 has not been too great. You know, we have seen a $1.5 billion of outflows. Last week we saw some $110 million coming in, but at the same time the overall we are net negative. So flows is negative.
Sure.
At the same time deficit is still a concern. And oil prices hitting 94, 95 levels, you know, if it sustains at these levels because of geopolitical tensions, I guess inflation would again be a concern, which got, you know, little bit soft numbers that come this time, which was a booster to the rupee. But I guess if the prices still move on and the commodity prices move on the way it is moving, I think inflation is still going to be a concern. And any hike of interest rates is not going to be positive for the economy anyways. So that's again something which is not great. Apart from the Asian currencies, if you compare, Indian currency, what he rightly said, is, you know, the underperformer among all the Asian currencies in terms of inflows and in terms of growth and in terms of everything. So I guess that is also something which is very negative for the rupee. And of course, the line of scams that we are seeing is definitely not promoting the FIIs or FDIs on a longer term horizon to actually invest in India. So nothing too great about India to cheer up. I think it is going to be a market which is going to be both for the exporters and the importers. I think 45 to 45.80 is going to be the wider range, with a little bit of depreciation bias in case of rupee.
All right, Abhishek and Adam, thank you so much for joining us for this currency call today. So rupee is something that would continue to be negative, as Abhishek says. 45 to 45.8 on the higher side is the range that could be coming in for the Indian rupee for some more days as of now. With that, completely out of time, and that's the end of the segment for currency call. Thank you so much for watching, but Business Day is coming up next.